Hey everybody, welcome back to the channel. In this video I want to make sure everybody understands what's going on. I've been watching the stock market crash most of the day. I was prepared for it because I've been watching it and making videos on commercial real estate, on these department stores like Macy's and Guess and other companies that are going down drastically. And this is after, keep in mind, the Fed came out and said, we're not going to move interest rates. Everything's, spoke a little bit dovish. Now there's Warren Buffett of all people. I was going to say a multi-billionaire, but Warren Buffett, like one of the richest of the rich, way up there on the rich ladder, okay? He made a video and it said, Buffett aims to raise awareness of this emerging crisis early to avoid lasting damage down the road. I think he legitimately wants to help spread awareness in his last days, sorry, there's a motorcycle going by. And he's right. I try to pay attention to those guys, okay? So I took notes and I just want to really push some things home so that we can prepare for and be aware of. He's warning about a $2.2 trillion problem in the commercial real estate industry that will significantly impact banks. That's the big takeaway, the banks. Interest rates declined over the last 40 years, fueling a real estate boom. Nobody can deny that, right? Buyers could afford more debt. So the people that purchased these properties could afford more. So they bought more. That's what people do. Now, as these interest rates creep up, they can't afford their note, but I'm getting ahead of myself. Banks lend money, they borrow from customers as deposits. So the bank's lending your money out to people that have commercial real estate. The profit of the spread between the deposits and loan rates is what they're after. Commercial real estate loans reset rates every 3 to 5 years. So every 3 to 5 years, they have a different interest rate. They have a whole different loan. They have to refinance. Now here's where it gets a little sticky. It's unlike a 30-year fixed. It's a whole different loan. The Federal Reserve dramatically increased rates recently, remember, causing commercial loan rates to spike. This means rising rates mean higher monthly payments for commercial real estate property owners. It's starting to happen now. If owners can't afford the higher payments, banks will take over properties at a loss. Significant losses can wipe out a bank's capital reserves and even cause it to fail. Most at risk are small local banks, not the big Wall Street banks. We know that. The government's going to bail them out. They're too big to fail. The problem has been building for decades due to low rates, easy to get money, to buy whatever you want and try to make more money, and is now reaching a crisis point as rates rise sharply. So we are literally walking into the Thunderdome, especially in commercial real estate. Even if some property owners can refinance, this is sketchy, check it out, some of them can't. Not all will qualify for new loans at higher rates, leaving banks on the hook. Is this sinking in? If anybody disagrees with me, that's okay, because it's not me. I like to watch the people that make the rules. Watch the people that have taken advantage of all the system had to offer. Warren Buffett's good at it, and I try to listen to stuff he has to say about finances on a regular basis. Commercial real estate loans make up a sizable portion of banks. That motorcycle again. Woomba, woomba. The FDIC insurance fund may face strains for resolving failed banks. the people that insure your money at the bank, the people that scoffed and laughed, openly laughed about how we had more faith in the FDIC than they did, require higher fees on other banks. So the FDIC insurance is going to boost their fees up. And that's going to do what? Make everything even more expensive. Buffett aims to raise awareness of this emerging crisis early. Government intervention may be needed. You can say that again. They're going to turn the money printer on like we've never seen it. Real quick, a shout out for Stacey. She told me to tell you that there was 60 of the pre-33 Liberties, the gold Liberties, for $65 over spot. It's an ounce of gold for $65 over spot, pre-33. Silver rounds, Morgans, and Buffaloes are $2.35 over spot. Cougar rounds, 2023 silver is $3.10 over spot. And gold, 1/10 maple, is $35 over spot. Guys, if you want this list, text 318-564-5823. Say, please put me on the email list and provide your email. That way you can get these prices at your disposal anytime you want. That sends you one email a week, and it'll keep you updated on what's going on, and we won't clog your email up either. Anyway, back to the story. But before that, I think we get to see the commercial real estate really bite a bullet. Just imagine the people that took a loan out to build whatever. Storage buildings, which they might do okay. Commercial real estate, right? Office buildings, malls, shopping centers. That has been a cash cow. It's wealthy people that are trying to make more on their money. It's that simple. People that have money trying to make more on their money, and it has been a staple. It's like commercial real estate. That is the way to go. Well, they're starting to wake up, and what I think they're doing is the wealthy people that have been in commercial real estate, and they're starting to see the economy really take a turn for the worst. I mean, people are having a really hard time making it, so they might not be able to afford the Louis Vuitton purse that they shouldn't even afford before. You know, people's spending habits are. So they're starting to see this. They're starting to see it first because they're on the front lines of the business. So they're starting to sell. That's why when I'm watching the stock market, it'll creep up and go boom. It'll creep up and go boom. Those are big, I'm going to say people, funds, smart money is dumping, and they let it trickle back up and they dump again. It's happening over and over. It was a stellar day in the stock market if you were a bear. Gap, Guess, Macy's. I mean, just check it out on the chart. It's pretty wild. And I can't imagine people spending a lot of money on things they don't really have to have as things get a little bit worse and people lose their job. And, you know, we actually experience a recession. A good old-fashioned recession, a really bad one. That maybe turns into depression, maybe not. We'll see what the government has to offer to try to keep us out of that. But I just want to make sure everybody knows what's going on. And feel free to fill me in on the comments on whatever you guys think, because that's important to me. The community's awesome, and I want to make the best sense out of this as we possibly can, because there's going to be a lot of people hurting, and it's not about we're going to buy all their stuff and we're going to do all that. It's more about trying to make it through it. You know, some people are going to make it through it a lot better than others if they were paying attention. And guys, in the future, in the Thunderdome, I think the wealthy people are going to be the ones that don't have mountains of debt, and they're able to be a little bit self-sufficient, and they're ahead of the game a little bit. Right? Financially prepared. Guys, have an awesome day. I'll see you in the next one. Later.